So, today, we are going to trace the economic shockwave that starts with the conflict between Iran and Israel, and, believe it or not, ends right in your wallet. It's a powerful story that really shows you just how connected our world has become. So, let's just dive right in. I mean, it can feel so far away, right? A conflict happening on the other side of the world. But this question, this is the absolute key. It sets up this fascinating puzzle. How can something happening in one spot send these massive ripples across the entire global economy? Well, that's exactly what we're going to unpack, one ripple at a time. Okay, so the first and most immediate ripple, it all starts with one thing, oil. You've heard it a million times, but it's true. It is the lifeblood of the global economy, and its price is super sensitive to what's happening in the Middle East. This is really where that chain reaction kicks off. All right, now look at this number, 20%. Now, you might think, only 20%? But get this, that's the share of the entire world's oil that has to squeeze through one single incredibly narrow waterway. We're talking about the Strait of Hormuz. And that is exactly why that 20% matters so much. This conflict puts that vital choke point at risk. And here's the crucial part, it's not even about a real disruption happening. Just the fear that one could happen is enough to send these huge shockwaves through the energy markets. So this chart really shows you the potential outcomes here. So on the left, you've got the current price for Brent crude. That's basically the global benchmark for oil. But look what happens with increased tension. Markets are already bracing for a jump to over $100 a barrel. And if there's a major supply shock, well, then prices could absolutely skyrocket. So that first ripple, that surge in oil prices, it was bound to create a second one. See, higher energy costs, they don't just stay at the gas pump. Oh, no. They kind of seep into the cost of pretty much everything else. And that directly fuels inflation. Let's break down how that works. So how does that actually happen? Well, it's a pretty simple but powerful chain reaction. Step 1, oil prices spike. Step 2, that immediately makes it more expensive to produce and ship, well, almost everything. And step 3, yeah, that's the one we all feel when we see those higher prices on the shelf at the store. And believe me, the impact is not small. Economists think a longer conflict could add up to 0.7 percentage points to global inflation. Now, to put that in perspective, that is a huge amount of inflationary pressure for the whole global system to just absorb. It basically means everyone's money buys just a little bit less. So where are you actually going to feel this pinch? Well, transportation costs are the obvious one, sure, but it's also in stuff you use every day, like plastics, or even the fertilizers used to grow the food you eat. Shipping and insurance fees go way up. And hey, if you live in a country that imports a lot of its stuff, the general cost of living can take a really big hit. All right, so we've talked energy, we've talked inflation, and that brings us to the third ripple, the one that slams right into the financial markets. Because let me tell you, if there's one thing global markets absolutely hate, it is uncertainty. So when you have this kind of high-stakes geopolitical risk, you see much sharper price swings, what all the experts call volatility, in the big stock indexes like the S&P 500 and the NASDAQ. It's just a classic flight from risk. Investors get nervous and they start looking for safer places to park their money. But here's the thing. This uncertainty creates some clear winners and some clear losers. So on the one hand, it's no surprise that energy stocks and commodity producers do well. The price of what they sell is going up. Defense and aerospace stocks also tend to get a boost. But then you look at the other side, the losers. You've got industries that are super reliant on fuel, like airlines, travel, logistics. They get hit hard. And same goes for sectors like chemicals, paints, and tires, because they literally need oil as a raw material. So where does all that money go when investors get spooked and flee those risky stocks? Well, it flows into what are called safe haven assets. Think of these as investments that are seen as really stable during a crisis. We're talking about things backed by huge stable economies, like the US dollar and government bonds, or stuff that's just held its value forever, like gold. They're basically the financial world's version of a storm shelter. Okay, let's zoom out now to the final and widest ripple of them all, the long-term fallout for the entire global economy. And this is where the risks get bigger, way more complex, and frankly, a lot scarier for the people in charge. And that brings us to a dreaded word you might start hearing a lot more, stagflation. It's this really toxic mix of slow or stagnant economic growth happening at the exact same time as high inflation. Someone once described it as being stuck in the mud while you're also on fire. It's the worst of both worlds. And the last time this was a huge global problem, the 1970s, and guess what? It was also triggered by an oil crisis. And the real-world consequences of this are really serious. You get slower growth, especially in countries that import a lot of energy, and everyday people just find their money doesn't go as far. This creates a massive dilemma for central banks like the Federal Reserve. I mean, what do? Do they raise interest rates to fight inflation, but risk slowing the economy down even more? Or do they try to boost growth and just let inflation run wild? It's an incredibly difficult tightrope for them to walk. And we can't forget about just the physical movement of stuff. When major shipping routes get disrupted, it throws a giant wrench into the global trade of everything, from cars to electronics to food. Everything gets delayed, it all becomes more expensive to move, and it just adds another layer of cost and frustration to the global economy. So this brings us all the way back to the beginning. We've literally traced the path from a single regional conflict to the price of oil, to the cost of stuff on your local shelf, and finally to the value of your savings, which leaves us with this one really powerful question to think about. In a world this connected, is any economic shock ever truly just local?